Hey, everybody. My name is Dru Wischhover, the owner and CEO of Inspired Title Group. Today, you guys are not going to want to miss this. We're going to talk about something that not a lot of people know about, but I think you need to know about it. It's title insurance. We're going to talk about why you need it, what it does, what it covers, and some of the horror stories that go along with it. So tune in to this podcast today.
Welcome to the Rental Property Owner and Real Estate Investor Podcast, brought to you by the Rental Property Owners Association, where real estate investors have found success since 1968. I'm your host, Brian Hamrick from Hamrick Investment Group. This episode is sponsored by Green Property Management, managing everything from single-family homes to apartment complexes in the West Michigan area. Find out more at greenpropertymgt.com. And RCB and Associates, helping real estate investors and small business owners navigate the complex world of health insurance and Medicare benefits at rcbassociatesllc.com. Hello and welcome to episode 517. Every real estate investor loves finding a great deal, until a hidden lien or missing signature brings everything to a halt. That's why title insurance exists. It's not glamorous, but it's one of the most important safeguards you can have. My guest today is Dru Wischhover, founder and CEO of Inspired Title Group. With over 20 years of experience in the title business, Dru has seen it all, from identity theft to divorce settlements popping up at the last minute, and he's here to explain why this boring but necessary part of the process is what keeps real estate deals on track. Dru, welcome to the show.
Thanks for having me, Brian. Love to be here. I'm excited to be in the 500s. That's awesome. Congratulations on 500 episodes. That's outstanding.
Explain just to our listeners what you're all about, why title insurance is so important.
I wouldn't imagine that, people are hanging around the local five and dime having, title insurance conversations. It's kind of something that, it's part of the process. It's part of the buying and selling process when you are kind of investing in real estate, whether you're a first-time home buyer or if you're an investor buying rental properties. And, title insurance is certainly something that it really protects you from. It really protects your ownership in that property. And the difference in what a lot of folks typically get confused on is title insurance is not like any other insurance. When you think about insurance, you think about, you're buying it and you're protecting yourself from the day you buy it going forward. If I get into a car accident, if my health gets bad, if something happens to me, in the future. And title insurance is something that you buy today that protects you from the past. Everything that has happened from the existence of time when that land was just dirt, all the way up until you take ownership of it. So the title insurance is covering that every transaction, every transfer of title has happened and it's been done correctly. So we're literally going back in the records and searching and making sure that each transfer to the different owners has been done correctly and has been done properly. And if it hasn't been, we kind of red flag it. We bring it to the attention of the attorneys and all the parties involved so that it's something that could be rectified so that when you, the buyer of that property, take ownership, you are the owner and there's no other lien or encumbrance that is out there to jeopardize your ownership of that property. Encumbrance, big word for, and lien, another word, mortgages. That's a lien. That's an encumbrance on title, something that you're obligated to pay. And we can certainly dive into the different types of liens and things that, we might see or you might see on a property. But the long and the short of it is it's something, and you pay for it one time. You pay for it at closing, and that's it. You're not paying a monthly fee for it. So, if your house is $200,000, the actual cost of title insurance is so minimal compared to what that risk is that it's protecting you against. Somebody, coming up to say, no, you don't own that property. I do because, I'm an heir to, my parents lived here and they both died and my brothers and sisters left me off the deed and I own 25% of this property. So, you owe me 25% of 200,000. Oh, well, that's a problem. Right. So, those are the type things that, it protects you against. And that's just one small example of what it protects you against.
Help us understand, though, the insurance part of it. Like, what are we insuring that if something does come up that wasn't found by the title company that the insurance is going to cover the cost of that?
There's two types of insurance policies that are offered. There's a owner's policy, and then there's a loan policy. Okay. And the owner's policy is obviously for the owner, that they are the title holder of record, as we say they are. The loan policy is protecting your lender. So if you borrow money, they want to make sure that their interest in that property is also protected, and that their mortgage is the only encumbrance on title. It's in the first lien position, so that if something were to happen, they can't get bumped out of that space. That they're, the obligation that you said you are going to borrow $150,000, they're going to get that money back because they're in that first lien position. So when we talk about what is the insurance and what is the value in what is actually being covered, don't mistake it as homeowners insurance. We do get those occasional calls saying, hey, my house burned, and can you guys help us out? Like, no, we cannot help you out. We'd like to, but we cannot help you out. Call your homeowners insurance. So it is different than the homeowners insurance. The homeowners insurance is, the content of everything that's in that house, as well as, the house itself, right? We're protecting an interest in that house. The land and the property that you own, we are protecting that. So if anybody challenges that your ownership, that's what the insurance is actually for. And people may think, well, who's going to challenge that? And how does that get, jeopardized? Oh, Brian, let me tell you, the ways that the horror stories are endless, and they're tragic, because when you look at the potential risk here, albeit not high, it's expensive. So that's why when I go back to the pricing of this, the value of that owner's policy is the value of the property. So if you bought the house for $200,000, that's the amount of the insurance value that is the losses, is the risk that the insurance company is putting up. And then the value of the mortgage, whatever you're borrowing, is what the loan policy is covering. So you have $150,000 mortgage. That's the extent of that policy amount. $200,000 you bought it for, that's the extent of that, payout. So at worst, the insurance company is on the hook for those amounts, not you as the owner. You're protected up to that amount. So using that example, if, there's a situation where mom and dad pass away, we go through the process of going through to find out who the heirs are. We get an affidavit of heirship, and we identify all the heirs. Well, if, siblings leave off one heir because they don't get along with them, or they're far away, or whatever reason, and all of a sudden they get wind of that, and they hire an attorney, and said attorney now knocks on your door or sends you a letter and says that 25% of your property is owned by Susie. And you go, what do I do? Well, that's where you exercise the title insurance to step in to help mitigate that loss and that risk. So now you don't have to pay anything. The title insurance company is going to file a claim against that $200,000 policy to say that, all right, well, she's looking for $50,000. Well, we have it. It's within that limit of that $200,000. And attorney's fees and all of the other things. So they're going to pay her out her amount, and you don't have to think about that and worry about that. So it protects you from a situation like that, and you're protected up to the amount of the purchase price of that house.
What are some of the horror stories you've seen? I mean, you've been in this for a long time. I'm sure you've got some great stories you could share.
The big ones are like that. The heirs that come out of the woodwork, a divorce. Spouses get divorced, and in a lot of instances, the husband in the divorce decree is supposed to deed his interest of the property to his ex-wife. And he never does that. And the court then usually has some kind of language in there that if after a period of time he doesn't do it, come back to the court and they'll do it. And they don't do it. And he goes and sells the property. And she now has she has a 50% interest in that property because, they were married. So her attorney gets involved in this thing, and now they go and attack this thing to say, hey, you know what? Here's where we're at. Here's what's happening. So tax issues, you don't pay your property taxes. That's a big issue too. And a lot of people will lose the house in a tax sale. Well, if that tax sale is not done properly, and they don't identify all the people in that were a creditor or had a right to the property, if they miss somebody in there, an attorney can intervene and say, hey, you were never named as you were never notified that this property was going to be going to tax sale, so you have a right to to that property. So now all of a sudden a stranger comes out of the woodwork to say that they have an interest in this property. Mechanics liens, that's another big one. People that work on your property, you have a contractor that comes in, you're doing an addition, and you get into a spat with them and you don't pay them in full. They put a lien on the property for the money that they were owed. You sell that property, title company goes ahead with the transaction, new owner now, they take on that obligation. That transfers with the house. So now that new homeowner has the obligation to pay the debt to your contractor that you didn't pay. And it was, it was disclosed, it was raised on title, but it was never actually handled. And it was the closing happened. And now new owner has got this liability against them that the policy will then, will then cover. And I mean, these things are out there. I think that, one of the stories that literally, happened not too long ago, and it's with some of the fraud that's going on out there in the world today. An elderly lady called me. She's 92 years old, and she's in this panic. She lives in South Carolina. She has a property in Southern Illinois that is a farmland. Her husband died. She said, my house is up for sale, and I didn't know why. And I said, well, okay, well, let me, give me a little time. Let me look into this stuff. So come to find out that this company had fraudulently executed a deed from her deceased husband to them to own the property. And now they're listing it for sale for an exorbitant amount of money. And she's in South Carolina unaware of that this is even happening. And because somebody told her that her house came up on a property list, and their property came up on this list, and she was hysterical. So we were able to intervene and stop the sale of that we notify our underwriter, which then, they put out this bulletin saying, hey, there's a fraud situation happening here. Don't do a deal from, these parties. And here's what we suspect is going on. So, there are, especially with AI right now, there are so many ways to, manipulate the system. And, one of the bigger industries that fraud is happening is ours, because we are the largest industry of transacting money on a daily basis. If you think about, how many closings you do in a day or in a week, that's a lot of moving money via wires and things that, they can intercept via, wire instructions and kind of, modeling themselves as the attorney or as the seller, as the buyer. And, we have to do a lot of thorough following up and checking to just not assume that, the person they say they are is legitimately who they are. We literally need to, qualify them that, hey, you are who you say you are, because I'm not sending any money to you until I know you're who you are. And in those instances, there's hundreds and hundreds of $1,000s. We had a situation, a wire came in to our bank, and thankfully we are a smaller company that we have a very good relationship with our banks. And they said, this is not something that you guys have ever really, a bank that you guys have ever really worked with. So we followed that out, and they turned around, and with that money got withdrawn, and we were a stopping point for it to be going overseas, and it just happened to hit our account. So we were utilized because we move so much money. They wouldn't think that nobody would know, because there's just so much going through there. And it's like, holy cow, this stuff is real. This stuff is really happening. I mean, think about being a buyer. You're all excited about buying this house, and you're all excited about, your first time, and, you wire money to your title company, and the title company continues to call your attorney and says, when are we going to be getting their wire? Because somebody, manipulated the wire instructions and changed the account information and the banking information. And all of a sudden you wired it somewhere overseas. And now your $200,000 to buy that new starter home is gone. And now what? Like, that legitimately happens.
I'd like to take a moment to tell you about Green Property Management. Not only do they manage everything from single-family homes to apartment complexes in the West Michigan area, they also manage my entire portfolio. So I can tell you from personal experience that their unique flat fee management style is worth a closer look. If you feel that your property isn't operating to its fullest potential, then Green Property Management can help you take a holistic approach that will save you money, eliminate your headaches, and increase your net income. And if you're a property manager interested in applying Green Property Management's model, give them a call at 1-866-95-GREEN or visit them on the web at greenpropertymgt.com. If you're thinking of leaving your W-2 job and becoming a full-time real estate investor, one of the greatest costs you must consider is healthcare for you and your family. When I made this transition myself, I found the whole healthcare insurance process to be confusing and frustrating. That's why I'm glad I met Chad Creasy at RCB and Associates. Chad is a professional health insurance agent who helps real estate investors and small business owners understand and choose their best healthcare options. And best of all, his services are covered by the insurance company and won't cost you a dime. If you live in Michigan and are expecting a change in your healthcare insurance coverage for any reason, or losing employer coverage or transitioning into Medicare, then you owe it to yourself to contact Chad Creasy at rcbassociatesllc.com. What does happen? I mean, are you able to retrieve that money? I mean, how would someone never get that money back?
In many instances, no. The answer is no. That's what the closing protection letter is for, which, the CPL, the closing protection letters, anybody who's handling wires is handling that instance where, all right, what happened? You can report it to the feds, you can call the FBI, you can do all these things. That's great. That money's already overseas. It's gone. So legitimately that transaction's over. And it's kind of like, you feel terrible, but it never hit our bank. So they look to see, okay, well, where was the problem? And what we've said and what we try to educate our clients on, and especially attorneys, is everything we send is encrypted. Okay. You're not going to get an email for us to say, hey, by the way, the instructions we sent you last week, we changed banks. It's now this one. Okay. And we always recommend that you call and talk to somebody in our office to confirm before you send any money. And 9 times out of 10, the buyers don't do that. And it's a shame. But there's been a lot more stops put into place with the different tools that we've been afforded that kind of validate bank accounts, routing numbers, people. There's so many different softwares, programs that we use now to input this information, and it kind of comes back and says, hey, this one's clear. This is a valid account, and it matches the ID that you've uploaded to us. These are the people you say they are. So, that doesn't mean it's not happening. It just means that, our industry is trying to stay ahead of it. And it's we're fighting an uphill battle, because realistically it is the biggest target, and they're targeting the folks who are, some of the bigger title companies, the bigger named ones, because they are just doing such volume of business. An extra wire here or there, it's like, well, we might not catch that for a day when we actually reconcile. Whereas the smaller shops like us, we are, we know our banks and have a great relationship with them. We really, really know our clients very well, that, we have a relationship, and we spend a lot of time on education trying to get these folks, to understand the process from the beginning. Here's how this is going to work. Here's what you're going to expect. Don't do these things. And, not to say that it hasn't happened to us, but to say that it hasn't happened and cost us a loss is really where we're at. You try to mitigate the amount of loss that you have in this, because any loss is big, and any loss is substantial to, jeopardizing your business, as well as, a relationship with clients and other industry folks too.
Help me understand, because it seems to me like in the case of fraud, the stories I typically hear is that a bad actor gets in between the buyer or the seller and the title company, and then sends out, it's kind of like shadowing until the time comes when they can send out an email to the person wiring the funds and say, oh, we changed the account, send it here instead. And a lot of times those accounts were just set up for that purpose, and they change a letter on the name. Why is it in today's age with AI and all this technology, the banks, the title companies don't have the technology to say, oh, wait a minute, okay, there's this account out there that looks very similar to this one, but it's just off by a letter. Let's flag that and not release those funds. Like, what is so hard about coming up with using technology to stop these things that seem very simple to pull off by the fraudsters?
The simple answer to that question is you'll find that where that's happening and the places that they're preying upon in those instances are the shops that are doing a volume. So you get into that busy regimen, and you're just, you're doing 4, 5, 6, 10 deals in a day. You're just staring at paper and you're flipping. And you've seen it before. Our eye makes it be what we want it to be. You can write something backwards and wrong, and we know exactly what it says because our brain fixes it. And it's in the same thing when you scan a document real quick because you're flipping through it, you move. So it's human error that blazes through that and makes that mistake. The technology piece, that's where a lot of the different programs now are, and a lot of the underwriters are forcing our hand to say, we need to go through a validation process of that wire, not only a confirmation, but a validation. And in order to validate it, you enter the information such as the routing number and then the account number, and it goes, yep, it's an account here in the US. That's cool. Send it. So they have, migrated to that type of technology now, where many of us are using that, and it may be a very valid account, and it comes back and says, no, we don't like this. So then you call the bank, and now the thing that I find interesting is when you call the bank and say, hi, I'm Dru from Inspired Title, and I'm just trying to validate this account that we're sending a wire to. And the bank goes, we're not talking to you. It's not your account. Going, did you hear what I just said? Like, we're trying to prevent fraud. Can you help me do that? You don't have authorization to, like, I have the account information. I have everything here. Can you just tell me it's an account in your bank? And we get a lot of pushback. That's the stuff that I kind of scratch my head every day and say, wait a minute, be part of the solution, not part of the problem. Simply, we're not trying to be the fraud person. We're trying to, help it, preventing it. And we're asking for a little help and support from other industry folks. So I know the banking industry has gotten, super, protective on how they lend and borrow and how, the privacy acts and all that. I get it. I totally understand it. But, we have to work as a collective unit to really make this thing work. And there are more advances coming out all the time. We get bulletins constantly from our underwriters talking about, new technology, or be careful, watch out for this, and things like that really alert us to doing it. But it's certainly something that over time, I would say 15 years ago, I wasn't having this conversation. I wasn't, really in a worry about somebody intercepting a wire, because things were done very differently then. You can fax wire instructions and not have to worry about somebody, scratching it out and writing in something different. But technology has advanced so far that, it makes it look like it's exactly what it was. And it's never been altered. I mean, I've seen a cashier's check for $500,000 side by side that we actually took in and deposited in our bank before the rules of anything over $50,000 had to be a wire. And 2 days later, my bank called me and said, hey, that cashier's check bounced. And I went, what? They said, oh yeah, that cashier's check bounced. So I had to chase $500,000 because we paid off a loan. We paid off all the parties of the closing, and it became a lawsuit. It became a big ordeal. And actually, the person who presented the check at closing was a shill. They weren't part of the deal. They were just kind of a middle person. And it was, so there was no recourse against them. And when you contacted the bank that was on the check, there was actually a person who answered the phone and says, oh, you're doing it wrong. There's a special way that you have to cash this check. And they would talk you through it. And when I connected them with my bank, same way. They showed no remorse. They were not nervous or anything. And it was called Sovereign Bank, and they were up in Michigan. And legitimately, I mean, that $500,000 check was garbage. The bank would not undo the mortgage that we paid off. So we were out the, 200 and some odd $1,000 that hit us there. And, we were able to recoup probably 60% of it. And it was a nightmare. And it cost us a lot of business. And we weren't at fault other than taking in a check that was certified that looked, and I've done many speaking engagements on it with that check as an example. And I passed it to, many of the bankers, and I said, would you take this? And I haven't had a one that would say, no, because it was just that done that well. So these guys are good. And we know they're good because, they continue doing it.
How do you protect yourself from that type of situation now? I mean, do you wait for that check to go through before you finish the sale? The
industry steps in and says, no longer are we taking cashier's checks for anything over 50,000. Everything over 50,000 has to be a wire. So the industry changed and deemed that, everything's got to be a wire. So, nothing over 50,000 is acceptable. So your risk of loss is substantially less. But no, what I've done is because we're smaller, my team is very, very alerted to the fraud and the things that are out there. Like, they are engaged in what's going on and they see it. And, because of that situation and many of them being part of that with me, they saw the angst that caused, not only within me, but within how it really snowballed into impacting our business and losing what were, long client relationships. And, they didn't even want to hear the explanation. It was just like, no, your buyer brought that in. I mean, that, like, we sent it to the bank. It wasn't our, and they're like, well, you should have done something. And it was, that was their end all. But so we lost some really good client relationships and business. Who knows what that really amounted to? But I think that the pain that caused and the, how tense it was to jump in and try to, call and say, hey, don't pay off that mortgage, up too late. Hey, don't pay off that contractor, too late. And then have to try to recoup it, hiring an attorney, going through the process of this claim, and it, going to court and dealing with this. It was incredible. And I said, I want to make sure my goal from then, this was in 2004, this happened. My goal from then was, my goal for the company is to keep us out of court. And really the only or easiest way to do that is don't take deals that are kind of, iffy. I'm all about creative thinking, and that's the luxury we have as a smaller title company, is being able to help these deals, go through, because we don't follow just what the box says and say, well, if it doesn't fit in this box, we're not going to do it. I have some creative ways of kind of coming around some things that are, all within the parameters of the law. But at the point in time when somebody's going to ask me to do something that is going to jeopardize or raise eyebrows that potentially can get a claim against us, nobody wins in that situation. Us as well as the client. And I'd rather not do it. And, the answer there is no. Sometimes the best deal you took is the one you said no to. And I legitimately lived that. And I try to, teach that and mentor that here.
You hear a lot about blockchain and how that's going to really change things in the title world. I mean, what's your take on blockchain? Do you see that helping prevent fraud and making your job easier, or is it further out than we think?
I think it's further out than we think. And I think that at least, and maybe this is wishful thinking, Brian, maybe this is me being still the old-fashioned, old school guy where we're a business and an industry that is people-oriented, okay? And I think if we start taking away the human element from this, as much as streamlining and AI can help us, I think we're going to lose touch with some of the personal pieces that matter in this business. Title insurance, like I said, it's not sexy, and it's not something that really anybody, unless you've been in it, understands. I mean, you're the CSI of real estate. You're digging deep into the history of property research. I don't know that AI can do, at least not yet, the intricate things that we do in making human decisions. There's certainly risk taking here that we have to take. So is blockchain going to be, I feel that if it's something that is going to integrate into our space, I think we're still some time down the way before it kind of it understands the differentiation between decision making and just acting as a human. Because as a title examiner of many years before I taught this to my current director of operations, I mean, she stares at this stuff, and there are decisions that she makes that are based on experience, based on going, I know that mortgage is old enough that if there were some recourse, it would be, the risk is basically nothing, or the statute of limitations is out on this. They would have to, file an extension, and and there's certain elements that when you look at this stuff, it's not just black and white, where it's, reading through the history of everything that happened and just, plug and play. It's reading through it and also making some assumptions and also speculating what may or may not have happened. I don't think we're there yet. So that's the critical thinking piece that I'm uncertain of how that will play out in years to come. I'm sure they'll find a way. I'm sure that, it's technology has been amazing, and I'm all for simplifying and streamlining and all of that. I'm fearful of taking out that personal piece and losing it. It becomes more transactional than it does, really celebrating and sharing a great experience with buyers and sellers for, unloading that home that was a burden maybe, or buying that first time home. I don't want to lose that gratifying feeling that we get as at closings and things.
How would our listeners get a hold of you, find out more about you, and feel free to plug your company, Inspired?
The name of the company is Inspired Title Group. We are located in Illinois, and we are licensed in Illinois and Indiana, but we're able to do closings across the country. So we work with a couple of our underwriting partners, and we are, if you have a deal that's in, Arizona, we're able to do it. If you have a deal that's in Florida, we can still do it. But the easiest way to get a hold of me is my LinkedIn, which is my name. It's DRU, and last name is WISCHHOVER. I am on all over LinkedIn. Our website is inspired-title.com. We're very, very big into, I just started this year, a not-for-profit, where what we do is every closing we do, I donate a portion of our proceeds from that closing to a not-for-profit and we're working in the community. And the not-for-profit is Heroes Helping Heroes. And so we're big into helping veterans all the way down to frontline workers, nurses, doctors, et cetera. One of the things that I'm really passionate about is giving back into the community, and we're trying to educate people about the mental health space and be a resource for people battling and struggling with some of the mental health things that are going on. And so I'm fortunate and blessed enough to use a business that's not sexy, being title insurance to do some great things and, giving back and helping out the community.
How do you see AI changing your business?
Is already doing it. It is speeding things up. There are bots out there right now that are, balancing closing statements and closing disclosures. They're, intaking some orders and things quicker. They're not doing the entire searching of some of the databases, but that's the next level is where they're going out to the different, counties and grabbing the data and, kind of putting it all together and things. So I think AI is going to be a very, very useful tool in making us more efficient in what we're doing and allowing us to do the eyes on expertise part of it. And I think that it will hopefully, expedite the process and really making it more streamlined and simple for closings and hoping to make them quicker and faster.
Dru, thanks for coming on the show today and talking about title insurance and, explaining what it is, why it's necessary, helping me understand just the insurance part of it. Like, what are you actually insuring? Really appreciated your examples, especially when you talked about the fraud and the identity theft and things like that. And then how technology may or may not affect what your business is when it comes to blockchain and AI. Thank you so much for having this conversation. It's been a real pleasure.
Thanks for having me. I appreciate it, and I'm glad I can help anytime.
I want to thank everybody for listening to this episode. I'm your host, Brian Hamrick from Hamrick Investment Group, and you can find out more about me by going to higinvestor.com. That's higinvestor.com. This episode was sponsored by Green Property Management, managing everything from single-family homes to apartment complexes in the West Michigan area. Find out more at greenpropertymgt.com. And RCB and Associates, helping real estate investors and small business owners navigate the complex world of health insurance and Medicare benefits at rcbassociatesllc.com.
You've been listening to the Rental Property Owner and Real Estate Investor Podcast, brought to you by the Rental Property Owner Association. You can find out more at rpoaonline.org. If you enjoyed this podcast, please go to iTunes to subscribe, rate, and review.